Currently, the market has closed for this session, and Strive Inc., trading under the ticker symbol ASST on the Nasdaq, ended the trading day at exactly 1.11 USD. The stock experienced a downward movement during the session, sliding by 0.020 points, which translates to a decline of 1.77% by the closing bell. If you were watching the intraday charts, you would have seen the price oscillating between a low of 1.08 USD and a high of 1.12 USD, reflecting a tight consolidation phase after what has been a period of significant volatility. While the broader market might be distracted by the daily noise of megacaps, the movement here in ASST suggests a coiling action that often precedes a decisive break, though the direction of that break remains the subject of intense debate among traders. When most investors look at a chart like this, especially for a company with a history of asset entities, now Strive Inc., the expectation is that they are looking at a typical micro-cap tech play, perhaps a company trying to scrape by in the competitive world of social media marketing or digital community management. The general assumption is that the stock moves based on contract announcements, small revenue beats, or perhaps a new algorithm change on a platform like TikTok or Discord. That is the expectation, a small, struggling tech services firm fighting for relevance. The reality, however, is radically different and far more aggressive. Strive Inc. has effectively shed its skin as a mere digital marketing entity and has transformed itself into a leveraged vehicle for Bitcoin accumulation, positioning itself as a smaller, perhaps more agile competitor to the likes of MicroStrategy. This isn't just a company selling services anymore, it is a corporate vault rapidly filling with digital assets, and the disconnect between its legacy identity and its current balance sheet strategy is where the true opportunity and risk lies. To understand why this stock is trading at 1.11 USD and not significantly higher or lower, you have to look beyond the simple earnings per share. You have to look at the flow of capital. We've seen massive volume spikes recently, with average volumes often exceeding 100 million shares, dwarfing the float. This indicates that institutional players and high-frequency algorithms are battling for position. You might be accustomed to tracking Tesla stock for its volatility, or watching NVIDIA stock for clues on the AI sector. But the volatility in ASST is driven by a completely different engine: the spot price of Bitcoin and the company's aggressive issuance of preferred stock to fund purchases. The market is currently trying to price in the execution risk of their strategy. Can they raise $160 million, as they recently aimed to do with their preferred offering, and deploy it into Bitcoin without crushing their own equity value through dilution? The slight drop of 1.77% today suggests the market is taking a breather, digesting the recent deluge of news regarding their capital raises and the subsequent Bitcoin acquisitions. Let's talk about the mechanics of how you might be interacting with this stock. Whether you're managing your own funds through self-investing strategies or relying on investment help from a financial advisor, understanding the structure of Strive is critical. If you are trading on Robinhood, you might see the ticker ASST and think it's the same old asset entities. It is not. The ticker remains, but the engine has been swapped out. For those using Interactive Brokers, you are likely seeing the high cost to borrow shares, indicating a significant short interest. Short sellers are betting that the company's aggressive leverage will backfire if Bitcoin corrects, while bulls are betting that ASST will act as a high beta proxy for the cryptocurrency market. This tug-of-war is creating the friction you see in the price action today. It is a classic battleground stock. If you use Schwab Intelligent portfolios, you likely won't find this stock in a standard automated basket because it is too idiosyncratic, too risky for a passive model. This is a stock for the active trader, the individual who understands that they are buying a piece of a corporate treasury strategy, not just a P&L statement. The narrative here is fascinating because it challenges the traditional definition of what a public company should do. The old school of thought, the one you might hear if you walked into a Fidelity branch or spoke to a consultant about Fidelity Wealth Management, is that a company should generate cash flow from operations and return it to shareholders via dividends or buybacks. Strive is taking a different path. They are raising capital to hold a bearer asset that does not generate cash flow but has a fixed supply. It is a macroeconomic bet. They are betting that the purchasing power of the dollar will continue to erode and that the scarcity of Bitcoin will force its value up relative to fiat currency. By buying ASST at 1.11 USD, you are essentially co-signing this thesis. You are saying that you believe the management team can navigate the capital markets effectively enough to accrete value per share in Bitcoin terms. It is important to contextualize this against the broader market. When you look at Apple stock, you are buying into an ecosystem of hardware and services. When you look at Strive, you are buying into a thesis of monetary debasement. The company recently closed a massive preferred stock offering, raising tens of millions of dollars. Where did that money go? Straight into the digital ledger. They have accumulated thousands of Bitcoin. This transforms the stock into a holding company. If you are sitting at home managing your individual brokerage account, you have to ask yourself, do I want to hold Bitcoin directly, or do I want to hold a company that holds Bitcoin? The advantage of the latter, and why stocks like ASST attract volume, is the potential for leverage and the ease of access within a traditional tax wrapper like an IRA or a 401k. You don't need a cold wallet. You just need a Fidelity trading platform or the Robinhood app. However, we must address the legacy business because it still exists and provides the listing continuity. Asset Entities, the original company, was built around social media communities. They offered services for Discord server management, TikTok engagement, and influencer marketing. This is a low-margin, high-churn business. It is difficult to scale without massive headcount. The pivot to a treasury focus is, in many ways, an admission that the original business model was not going to produce the exponential returns investors crave. By keeping the legacy business running, they maintain their operational status. But make no mistake, the driver of the stock price is now the crypto balance sheet. If you are analyzing this stock using SoFi active investing tools or looking at the Interactive Brokers trading dashboard, do not get hung up on the revenue from Discord servers. It is a rounding error compared to the mark-to-market swings of their Bitcoin holdings. Let's pause for a second. I want to know where you stand on this corporate strategy. Comment below with how many shares of Strive Inc. you currently hold, or if you think this pivot to a Bitcoin treasury is a stroke of genius or a reckless gamble. I want to see if the sentiment in the comments matches the buying pressure we're seeing on the tape. Now, let's look at the risks. The tension between expectation and reality is sharpest here. The expectation is that because Bitcoin has been in a bull market, Strive Inc. should be skyrocketing daily. The reality is that financing costs money. Paying dividends on preferred stock costs money. If the price of Bitcoin stagnates or drops, the company still has to service its obligations. This is the danger of leverage. If you are using Robinhood Crypto to buy the coin directly, your risk is just price variance. If you buy ASST, your risk is price variance plus execution risk, plus dilution risk, plus regulatory risk. It is a compounded bet. That is why the stock is trading at 1.11 USD and not 5.00 USD. The market is discounting these risks. The smart money, likely executing through Interactive Brokers stock trading desks or Fidelity Investments institutional arms, is hedging their exposure. They are likely long the stock and short the coin, or vice versa, capturing the arbitrage spread. Furthermore, we have to consider the sector momentum. We're seeing a wave of companies exploring the strategy, trying to copy the playbook written by other corporate pioneers. Strive is one of the first microcaps to do it at this scale. This makes them a test case. If they succeed, we could see a flood of small-cap companies pivoting to asset accumulation. If they fail, it could serve as a warning. This binary outcome potential creates the lottery ticket effect that attracts retail capital from investing sites and Robinhood fractional shares buyers. It is high stakes. The 1.77% drop today is just noise in the grand scheme of this binary outcome. Future outlook is where things get really interesting. If Bitcoin breaks through the six-figure mark, the assets on Strive's balance sheet will reprice violently. The stock could see a gamma squeeze-like move where market makers are forced to buy shares to hedge the call options they have sold. This is the scenario the bulls are waiting for. On the flip side, if we see a regulatory crackdown or a sustained crypto winter, a company with this much leverage could face an existential crisis. The stock could drift below the $1 mark, inviting delisting notices and forcing reverse splits. This is the reality you must accept. It is not a savings account. It is not one of your stable Fidelity